Market direction is the single most important thing every investor needs to know. Before the October 10th market drop, VectorVest was on it. A first warning on August 31st. On September 26th, VectorVest flashed 3 red lights and advised a downside bias. On October 4th, a major confirmed down signal. And on October 5th, we warned investors that a further sell-off was likely. How's that for clear direction? Test drive VectorVest for yourself, 30 days risk-free, under $10. Before you invest, check VectorVest.
Good afternoon, everyone, and welcome to our YouTube live stream. My name is Glenn Tompkins. It's my pleasure to be here. First thing I want to say is thank you all for being here, taking time out of your day, out of your schedule to be with us today. If you are here and you are able to chat, by all means, please do so. Chat in. Let me know that you're here and where you're from. I already know that Jay is here. Good customer of the VectorVest service. So I know that he's here. Anybody else who's here who wishes to chat, by all means, chat along with me. It is better if we can make this interactive. For many of you, if you don't know me, my name is Glenn Tompkins. I work for a company called VectorVest. Well, this is the VectorVest YouTube live channel, so you know that it's VectorVest. But I've worked with VectorVest now for about 15 years. Next month will be 15 years. And I enjoy having opportunities to talk to you individuals who are either subscribers to the VectorVest service or not subscribers to the VectorVest service to teach you about the VectorVest software. It's a software that's been around since 1995. They are all about being a portfolio and stock management system. Being able, or stock and portfolio management system, helps you to analyze any stock that we track. We're not brokers, so you can't trade directly through us, but we do have tools within the tool, the VectorVest tool, that you can trade directly from the software to a broker that has been aligned with us. So that can be done.
Bruce is here.
Bruce is here. Good afternoon, Bruce. Glad that you're here. So as I continue to talk about the VectorVest software, again, we're not a broker. We are an analysis tool. You can take any of the stocks that we have in our software, analyze them for value, safety, and timing, and be able to make a better decision, a better informed decision. That's a better word. A better informed decision about the stocks that you buy. Many of you may be caught out there with things that you get by way of email or by way of newsletter. It tells you, wow, if you would have bought this stock 5 days ago, you'd be up 575 trillion thousand %. Or you'd be up enough money to build a wall for the United States against Mexico. Oh, I digress. Sorry. Or you'd be able to make a lot of money in a short amount of time, but they don't have a footprint in the sand. It just says that, you know, look at the stock's price a couple of days ago and look at the stock's price now. Man, you could have done that. With the VectorVest software, can you find gems that will be able to do that for you? The answer to your question is yes. But by way of using the tool to find these stocks at the beginning levels before they take off, is a skill set, and we have the tools within the software to help you to find stocks that are on the break or the verge of breaking up to the upside. So you can do that, and you know, you don't have to wait on that newsletter and come in after the fact. All right, we can get you in prior to so that you can make those decisions ahead of time. So that's what we do, and I work, like I said, for this operation or for this company for almost 15 years, and it's definitely changed my life financially, and it didn't happen overnight, you know. So this is, if you're new to the software or if you're new to this channel, this is nothing about building wealth overnight and become an overnight billionaire. Nothing like that at all. It does take some work, but with this VectorVest software, it takes a lot of the load of the work off of your shoulders because we do a lot of the heavy lifting. And in doing the heavy lifting, we're going to put you on a path to be able to successfully make money, and key word there, to successfully I mean, to consistently make money. And that's what the key point is. Sorry about the water. I'm extremely thirsty today, which is not altogether a good thing, but I'm working on that. I'm working on that. And again, glad that you're here. Hold on, let's see. Jay is here. Bruce is here. M. Ray, hi Glenn. I've been using your service for a few years. The only platform that makes me money. Your tools are awesome. Thank you for that, M. Ray. I do appreciate hearing that. And so it's not only me just talking. You get to see, I think they get to see each other's chat here too. So you guys get to see the chat. It's not me saying that. It's a subscriber saying that, and definitely appreciate hearing that. But I have an innate, maybe innate is a good word. I have a deep passion for the software. Instead of trying to make a new word, I do have a deep passion for the software, and hopefully it comes across in the presentations. For those of you who may be new and have heard my voice but not seen my face, this is an opportunity for you to finally get to see my face, and hopefully I'm not disappointing. And if I am, keep it to yourself. How about that? All right, as we keep going along, we're starting a new series, a new 4-part mini-series starts today on both YouTube and Twitch. And the mini-series is going to be all about learning how to start a trading plan from the beginning to the end. So it's going to start off with learning how to plan your trades, trade your plan. The next part is going to speak specifically about market timing. And then the third and fourth sections are going to actually show you how to put a plan in place, how to back test a plan. All right, and if you're new to the market, this could be very crucial in understanding what fits you as an investor and how to best use the VectorVest tool to put these ideas into practical application. So it's going to be a new 4-part mini-series starting today, and today's session is all about planning your trades and trading your plan. Let me explain about that. And I know you've probably heard that on more than one occasion about planning your trades and trading your plan. What does that really mean? Well, in order to plan your trades, you have to have a trading plan. What is a trading plan? A trading plan consists of 3 things and 3 things only. A trading plan consists of knowing when to buy, knowing what to buy, and knowing when to sell. That's all that makes up a trading plan. Now, all of the things that you can add within those 3 things is all up to you. You can make it as detailed as you want it to be, or you can make it as loose as you want it to be. But if you're first starting off, and even for the people who already have a trading plan in place, this may at least be a refresher on knowing how to plan your trades and trade your plan. So knowing when to get in, knowing when to buy, knowing what to buy, and knowing when to sell makes up your trading plan. You've got to have that. Now, when trades stop working for you, what that tends to show me, if you go back through your trading plan, you stop doing something in that trading plan. If you agree with that, type a yes in the room. If you agree with when things are not working for you, you deviated from your trading plan at some point in time. So I want to hear if that has been the case for you. Now, I know there's a delay, but just curious to know how many of you are really going to man up or woman up and say that that is the case. Now, as you're answering that question, a lot of times if you don't have a trading plan and things don't work, how do you know what to go back to fix? So without a trading plan, you're flying blindly. And sometimes when you're flying blindly, you can make some money. And sometimes when you're flying blindly, you're going to lose some money. So let me move this over here. You're going to lose some money. You would rather put yourself in a situation where you're going to...
Texas Pete said yes, Bruce says yes.
Texas Pete said yes, and Bruce said yes. Excellent. So if you don't have a trading plan, how are you going to know how to fix it? If you're flying by the seat of your pants, how are you going to know how to effectively fix what you did wrong? With at least a trading plan, you can say, man, I said that I was going to get out here, and then I put a mental stop, on the stock, and then I took a bigger loss than I meant to take. And that'll happen a lot. Jay says, I now plan my trades before I get in, but I learned it all from you. There you go, Jay. So thank you for that, Jay. It's all about learning how to plan your trades and trade your plan. So what we're going to do today is we're going to spend some time on looking at some of the trades that you currently have or trades that you have missed out on or that you were in and you lost a lot of money. Let's talk about understanding when you enter a trade, when you exit a trade, and how you take your profit and how you get stopped out. So I am going to need information from you guys. I am going to need interaction from you guys because I want to be able to look at trades that you're currently in. Better yet, so I'd like to look at trades that you were in, that you either made money on or you lost money on, because that's part of trading your plan. You got to know when to get in. So when you show me the trade that you did in the past, show me what stock it was and when you got in, all right? If it's a trade in the past, show me a stock that you got in and then what the ticker symbol is. While you're gathering that stuff to type into the room, let's start off with the whole idea of knowing when to buy. So I'm giving you an opportunity right now to come up with a list of stocks. I don't need them yet, Joey. Okay, to come up with a list of stocks. And when you do, if it's a stock that you own right now, all I still need is the date. I still need the date and just put the date, put the stock, and put current. If it's a stock that you traded in the past, put the date, put the stock, and put past. All right, so I'll be able to determine which stocks were when. All right, so you do that, but in the meantime, let's take us to the home page. And from the home page, we're going to start to determine if this is the right time to start buying stocks by way of trading our plan. So when we look at the home page is our newspaper into the market. All right, and as a newspaper into the market, we have a couple of traffic lights. We have a daily traffic light, which is our market timing gauge. Right now it's pegged straight up in the green. The color guard is bullish, and VectorVest gives the guidance of buying safe, undervalued stocks that are rising in price at this time. Now, if you need more of a traffic light, let's move down to the color guard. This is a 6-day snapshot of all of the colors within the color guard. We can use this. What's the main color you see right now? 3, 6, 9, 10. We have 10 green, and that means we have 8 yellow. We still now have more green than yellow. The market is still giving us more of a bullish go sign. When you see a lot of green, it's good to go and buy stocks long. When you see a lot of yellow, it's a good time to slow down on all of your trades. And when you see a lot of red, that's a good time to stop buying stocks long. Joey, are we getting any stocks over there?
We got drip from Jay.
That's it? Folks, I need more stocks. All right, because this is, the past 2 weeks, I was flying contrary to VectorVest. Lost some money, a hands-on lesson. Hurts, but didn't lose much. I'm just saying, you know what. Oh, you didn't lose your, okay, and that's good. So we're going to help you. I still need more stocks. If not, I'm going to come up with my own, but I'd rather get stocks from the people in the room than to come up with my own stocks. All right, so based upon what you see right now, the daily traffic light says it's okay to buy stocks. The 6-day traffic light by way of the color guard says it's good to buy stocks long as well. Now let's go over to the market timing graph. And from the market timing graph, we're going to confirm if it's okay to buy stocks now. Let me zoom in a little bit. There we go. We had a market bottom that hit on 12/24 of 2018. From that point, the market is just steadily rising higher. Very close to the 3-month high back here on 1/7 of 2018. The closing price was 46.02 on the composite. And right now we're at 45.88. So keeping all of that in mind, the 2 traffic lights on the home page are telling us it's okay. We can look at our VectorVest composite by way of, by way of the VectorVest composite that is still moving up. So right now it's still good to buy stocks, right? So if I'm planning my trades, I know that it's okay to buy stocks now. Let's go over to, can you give me the side of this, Joey? And this is probably, nope, that's not what I'm looking for.
What side?
The side of here. Give me the side. Is that, are we in the viewers? I need the left side. Can you get me the left side?
You need to go.
I need to do it from here?
Yeah.
All right.
Well, don't minimize that. Just go down to VectorVest.
All right. By the way, that's my producer, Joey. Say hi, Joey.
Far left.
Far left. This one. And now I can go to
Is it up there?
the viewers. Better yet, we're going to go to Unisearch tool. Ooh, you don't have that, do you?
I do now.
Oh, you do now. There we go. So now from here, this is where it all starts. We all now know that it's okay to buy stocks. Now, what do? We go look for places to find stocks. We look for our candidates. How many of you are more aggressive? Type a yes in the room. Remember, today I'm going to need interaction from you. How many? Huh?
We've got a few more now.
All right, we got a few more stocks? Excellent. How many of you consider yourself to be more of an aggressive investor in the market? And if you do, we have a folder here that says search is aggressive. This is a good place to start to find your aggressive trades. All right, and all of these strategies are designed to hone in to the over 8,000 stocks that we have, hone in to the more aggressive types of stocks. We have strategies, something like an aggressive small fry. We type lines in here. How about stock exchange not equal to the indexes? Stock industry group not equal to ETF short. But we want stocks that have an average, 50-day moving average of volume of 100,000 shares. Price of the stock has got to be greater than $1. Relative value, one of our key proprietary indicators, looks at the long-term price appreciation potential of a stock, greater than 1. And then you have relative safety less than 1. That is ideally suited for an aggressive trader. And the price actual is less than $15. So this search is looking for stocks that are greater than $1, but less than $15. So all of these searches, let's go to Bottle Rockets, have their own characteristics to hone in on more aggressive stocks. How about the growth rate of the stock greater than 25% a year? I like that. Remember, earnings is the engine that drives a stock's price higher. Earnings growth rate shows it's growing its earnings growth in a percent on a year-over-year basis. How about relative timing greater than 1.5? These are stocks that are definitely in an uptrend. Price actual greater than $1, average volume greater than 100,000 shares. And if you want to change these indicators to make them more in tune to how you invest in the market, you can simply click on any of these values and change them to reflect how you would like to find stocks. But these searches find parameters at a fixed point in time to meet specific characteristics to help you to find specific types of stocks.
Kim
So,
Murphy says she's here to learn, not an investor yet.
okay, excellent. So we got a new person learning how to invest in the market. And actually what we're doing is we're going over the process as a new investor, as a person trying to get acclimated to the market. This mini series that we're getting ready to present starts you off on or from how to start to get into trades all the way through how to start to trade a trading plan. This week, we're talking about planning your trade and trading your plan. So the first part of planning your trade is make sure that the market is moving in your direction. That's why market timing is important. Once you now know if it's okay to buy stocks, now you need to find the types of stocks to get into. You have to know the type of investor you are. So if you're a new investor, my suggestion would be to start off more so in the conservative folder. This is the slowest moving searches or stocks that we have in the software that have great upside potential, great safety. These are stocks that are going to have a way high probability of helping you to make money. So that's what this is going to be all about. Looking at conservative stocks. Let's start off that way. Relative value less than 1.
Can you make that any bigger?
Can I? No. This I can't. No. Relative value, I can't make this bigger. I can make the stocks that show up bigger. But relative value less than 1, but relative safety greater than 1. As a conservative investor, safety is your primary concern. If you're new to the market, I'd rather have you in some of the safest stocks in the database than not. Relative safety is a great indicator to find you long-lasting, very little volatile stocks in regards to the market. All right? How about actual price greater than $1, average volume greater than 100,000 shares? And this is sorted by dividend safety descending. So not only are the stocks with a high relative safety, but dividend safety. A lot of these stocks are ideal for playing both options and taking in dividends on a quarterly basis. So you can keep in mind, if I'm a longer term investor, a great way to make money, I can make money 3 times on those longer term stocks. I can buy the stock and make money on the capital appreciation. I can get the dividend every quarter. That's putting more money in my pocket. That's creating more income or generating more income. And once I learn how to play options, I can sell covered calls on those and generate premium as far as a way of generating income. So technically, I can make money 3 times on one stock based on price appreciation, based on the dividends I take in, and if I get into the options world, learning how to trade covered calls. As a longer term investor, it's all about making money. It's all about finding stocks that go up, but additional streams of income will help to grow that portfolio. All right? So if I'm a brand new person, I'm going to put you more so to the conservative stocks. How many of you are swing traders? And if you're a swing trader, how about going to search is prudent? This is probably one of our bigger folders of stocks to look at. These are great ways to find stocks as a swing trader to get into a stock for a couple of days to a couple of weeks. This is a great folder to find stocks. So now we've covered 2 aspects of a trading plan, knowing when to buy and knowing what to buy. The what to buy is going to be generated by the type of investor you are. But it's important to know the type of investor you are. And recently I just did a live presentation on trying to determine the type of investor you are. I did that on YouTube too as well. You need to go watch that. So anybody who's not knowing yet the type of investor you are, go take a look at that previously recorded YouTube talking about the type of investor you are. And remember, that's going to be very important in your trading plan on knowing when to buy, what to buy by way of knowing the type of investor you are. And then a little bit today, we're going to cover about when to sell. But that is your trading plan. If you're new to the market, you need to write that down. Your trading plan needs to consist of when to buy, what to buy, and when to sell. Texas says, sold low this morning, should have held it. All right, we'll talk about that. I'm here to learn, not an investor yet. I got you, Kim. In PTX currently, line in the sand. There you go. You got a line in the sand. Excellent. We're going to talk about that. So let's start putting in some of the stocks. Can I do it from here or do it from down here? I'll do it from down here. I'm going to build a graph or graphs on all of the stocks that you just talked about. So drip, thank you, Joey, by the way. KL, Kirkland, PCMI, comma, TREX, comma, LOW, is that Lowe's? Comma, PTX, comma, Yeti. Are we still in Air Yeti? Yeah, that's right, Jay. We're still in a Yeti from this morning. AAPL, the best stock in the whole wide world. BABA, comma, FB, that's current. All right, and thank you, Krishnan, for typing in as well. Jay, everybody who typed in, thank you very much for your input. I just took all of the stocks now, and I put them onto a graph. Wow, Joey. We're going to fix that. We're going to get it done. All right, so first thing I ever want to look at a stock, take the crosshair cursors off. First thing I ever do want to look at a stock is look at a 1-year graph. Whoever gave me drip, and Joey took the screen back over, so it's okay. Whoever gave me drip, and I want to ask everybody, is this a stock that you guys want to hold for the long term? Yes or no? Type it in the room. Graphs don't lie. Graphs don't lie. When you see what a graph has to give you, the graph is the DNA of the stock. When I first open up and look at a 1-year graph, anybody in here want to hold this stock for the long term? I want to hear what you have to say. Joey, let me know when they type in. Very straightforward. When you look at a graph, you're going to be able to know if this is something that you want to hold long term. So instead, if you didn't want to type in yet, let's go to the next one. Wow. Is that a stock that you want to hold for the long term? The graph told me that right away. I didn't have to think about it. I didn't have to read news about it. That's what I'm looking for. When I look at a graph on any stock, I want to see a stock graph go from the bottom left to the top right with as smooth a pricing pattern as possible. Look at the earnings. Earnings is the engine that drives the stock's price higher. So let's go through these real quick. Okay. PCMI with the most recent, let's go see. Ray said, I'm looking at you're using U.S. listed stocks. Do we have access to all 7 lists? Keith, you have, in order to have access to all of the markets, you have to subscribe to all of the markets. But yes, I can pull up all of the markets in all actuality. All right, so I'm seeing all of the people that are saying no. Great. All right, Jay says, nope, not drup, it's drip. All right, so we made some money last week, swing and drip, but that was on a swing trade. So I want to look at these stocks real quick so that when you open up a graph, you're able to see if there's something that you want to get into right away. Remember, these are all defaulted to a 1-year graph. PCMI, I like that it's moving up now, almost kind of parabolic though, kind of scary. But look at that nice move. It did pull back over the last year though. It is higher and I like earnings. Next one, T-Rex. Would you want to hold on to this? And you don't have to answer this in the room now, but just look at a graph. And if these are graphs that you were looking at before you go buy into them now at least you have a better understanding of what you're looking at before you buy. All right, next one, Lowe's. All right, moving up now, but a lot of volatility. Look at that big swing. If you can't sit through all of this, then that's probably not a stock for you unless you're trading it. Woo, PTX. Good. Gordon Gin. That don't look so purty right there. Purty. Not pretty. Purty. I'm in the South now. That doesn't look so purty right there. But it did try to give a big run back. We'll come back to that. How about the earnings? They're getting less bad. Earnings they lose money on the rate of about $6.22 annualized. But they're losing less money. So that's a positive. Let's move to the next one. Yeti is brand new stock. Still doesn't have a ton of information behind it. We just started tracking it on 10/31/2018. Apple. As much as I love Apple, I'm not in love with Apple. As much as I love Apple, I always know that there's a bad time to trade a good stock. As much as this stock is looking great, back in the months where we had a lot of volatility in the market, Apple got hurt and got hurt hard. If I were looking at a graph and people on TV could have been saying, hey, you still need to buy Apple, go buy Apple. And I look at this graph and go, are they crazy? Look at this graph. All right, so there's a bad time to be in a good stock. The stock is doing a little bit of a rebound now. We'll come back to that in a second.
Seldon added 2 stocks.
2 more stocks are added.
TLND.
All right, hold on. I'm going to add those 2 in a second.
Keith Johnson says the last search showed values from $1 through $15. Does VectorVest show penny stocks?
Does VectorVest show penny stocks? So let me do 2 things at 2 different times. What's the 2 stocks that you wanted me to add?
TLND.
Talon, TLND. Yep.
LSCC.
LSCC.
CRON.
I don't think LS, there it is. CRON. Kronos.
And CGC.
CGC.
Seldon.
Thank you, Seldon. All right. Talon, over the last year, do you like it? All right, remember, we're going to come back to these graphs in a moment in a different mode. LSCC, do you like it? That looks kind of hot. Looks kind of nice. Next one. Also, Kronos looks good. And CGC, both of these are in the weed stock or the marijuana stock industry. Kronos looks much better than CGC. All right, so I'm going to come back to these. Let's go back to the ones that we first started off with, right? So on a 1-year basis, we can definitely say for the longer term investor, which ones of these we'd rather be in. When I'm looking at a graph over the last year that goes from the bottom left to the top right, those are the graphs for the long-term investors I want to take a look at. Let's slow this down a little bit. Let's move it from a 1-year graph down to a 6-month graph. It's going to give us another picture. Go ahead.
So Christian just said, what time frame should we look at for long-term, 1 to 2 year prudent investing?
If I'm going to look at a graph from a long-term perspective, I want to look at probably about a 6-month to a 1-year graph. All right, for the most part, for that swing trade. If I really want to get super down and dirty on a stock that I'm really trying to hold for the long term, like Kirkland. Kirkland looks great on a 1-year graph. It looks great on a 6-month graph. If I really want to dive in to say, do I really want to hold this for the long term, I would go to a 5-year graph. On a 5-year graph, not a whole lot of data before 7/18 of 2016. That's something that I would really hold. All right, but if I can look at a 1-year graph, that's a good enough indication, in my opinion, to look at to determine whether it's something I want long term. And if I want it long term, I really want to make sure that the stock moves from the bottom left to the top right with as little dips as possible, with as little volatility as possible. Hopefully, does that make sense? Who asked me that? Christian, does that make sense? You know, could I look at a 5-year graph? I can. Let's go to the next one. PCMI, I like it on a 1-year graph. Let's go to a 5-year graph. See, this is what I'm looking at. If on a 5-year graph, it can deter you because something just could have happened in the history of the stock. And now, overall, though, it is moving from the bottom left to the top right. But a lot more volatility, but a lot more data to take into effect, right? So let me put this back on a 1-year. Do you like it on a 1-year? And that would be my answer for that longer term hold. All right, hopefully that makes sense. Next one, T-Rex. I said be careful, you know, looking at it on a 1-year graph. Let's go to a 6-month graph. On the 6-month, it's still lower than the most recent high that happened on 9/12. But trying to make a rebound, earnings looks good. As a swing trade, I don't mind that, especially because I know I'm going to have a profit target right about here for the high because that's the most recent high. All right, so all I'm looking at, I like lows on a 6-month graph. PTX looked good until it started taking some profit. Yeti looks good on a 6-month graph. Apple is going sideways on a 6-month graph. Baba is moving up, took out a previous level of resistance, came back down. Be careful with that. Notice that when I'm looking at a graph, no matter what, I would like to see a stock hitting very close to its most recent highs. That helps me to ensure that the stock's price is still moving higher. All right, let's go to the next one on the 6-month graph. Facebook, man, started to run, gapped up, but since that time has pulled back. Let's go to your other stocks that you gave me and put them on a 6-month graph. CGC, a little sideways, it is moving higher on a 6-month graph, all right, but not by a lot. Whereas if I went to, what was the other one? Kronos looks better. Kronos looks better than CGC does. All right, let's take it one step further. Let's now take this to a 3-month graph. Now, the shorter the term, sometimes the prettier the graph. But the shorter the term period I'm looking at, the more of a shorter term investor I am. A 3-month graph is good for that swing trader. The 3 to 1 month is good for that swing trader. 6 to 1 year is good for that longer term investor, primarily more 1 year. Does that make sense to everybody? That 1 year is a good look back period for your longer term holdings. And actually, if you really want to go further than that, then you can go to a 5-year graph, okay?
Did we answer Keith's question?
What was Keith's question?
Show penny stocks?
Penny stocks. Let me go back to that. Let me go get into, where was the Unisearch at?
No, you had it in the main. Yep.
There we go. So I'm going to take this aggressive search. This is for Keith. I'm going to take this aggressive search. Actually, I've got a search under search is speculative. I got a search for you. Price greater than 50, less than $1. How about that, Keith? How about that, Keith? You want to find, that's about as penny as I would really want to go. I'm going to run the search. All it is looking for stocks less than $1, but greater than 50 cents. I'm going to add a couple of things in here. I want to make sure that the stock volume, and because I'm looking at penny shares, penny stocks, I'm going to bump up the volume. Let's say that the stocks have to have a volume greater than 500,000. How flexible is that? So I'm still looking at stocks between 50 cents and $1, but average volume greater than 500,000. So at least these are stocks that are traded. These are penny stocks that have volume behind it. Now, let's go see if I can make this even better for you. I like the idea sometimes of looking for penny stocks, right? So watch this. How about penny stocks that have good upside potential? Let's go use that RV indicator. Let's go stocks, capital appreciation RV. That is the stock's long-term price appreciation potential, okay? Let's take that RV greater than or equal to 1.25. Let's see if that works. I didn't get any results. That was too stringent. Let's bring this down to 1.10. Now I'm looking at penny stocks, 500,000 shares traded that have good upside potential. Keith, how about that? How about that? How cool is that to be able to find a good quality penny stock within the VectorVest software? So these are stocks less than $1, greater than 50 cents, 500,000 shares average volume with a relative value, a good upside potential greater than 1.1.
Let's graph one.
Say again?
Let's graph one.
Let's graph one. All right. Let's go over to my graphs. Let's graph them all. We'll do that. RAD. So what I like about the question is, if you're trying to understand the type of investor you are, knowing that if you are an aggressive trader, why not try to find aggressive stocks? Let's go put this on. I'm going to put this on a 1-month graph. If I'm a little bit more aggressive, I don't need 3 months. I probably need a shorter time period. 1-month graph. What's the stock doing? The stock is in a sideways move. If the market's moving higher, 80% of the stock should be moving with it. This one is not. All right, let's go see what the next one is doing. Man, this one fell, moving sideways. So the good thing is that it's not moving down, but the bad thing is it's not moving up. And let's go to the next one. All of these gap down. This is gap down, AKAO, but it's got an open red candle. This stock has got some upward mobility based on the stock's price fell all the way to this low this morning, but since that time, the stock's price is moving higher on good volume. Right? It's good bearish volume, but still open candle. It will be harder to find those good quality, low dollar stocks. It just is what it is, but the tool will at least put into your hands the best candidates that we possibly can. All right. So learning to utilize that Unisearch tool in regards to what type of investor you are is important. Still trying to plan your trades. Let's go back to my first graphs. And now let's move these from a 6-month graph down. I already started doing that with a 3-month graph, right? CGC, not so bad, bottom left, top right. In the shorter term time period, it looks better. Chronos still looks good. And LSCC still looks good on a 3-month. Watch earnings though. Earnings is starting to fall as the stock's price is rising. Remember now, the lower we get on the number for the look back, the more aggressive this trade becomes. The more aggressive this trade becomes. Let's move over to Facebook. Let's turn that one. Put that on a 3-month graph. Facebook now on a 3-month graph, moving from the bottom left to the top right. But right now, since it hit this high, I'm not thinking about getting into it. Make sure that if you're getting into a stock as far as planning your trades, make sure you get into the stock as the stock's price is rising. That is important. Don't put yourself in a situation where you're buying into a stock that's falling. Always make the higher probability trade of buying into a stock as it's rising. I'm getting pulled into another, okay. I'm closing them out. There we go. All right, Alibaba, look at that. I like the graph. Well, not totally like the graph. I hit an email. I got you. I don't totally like the graph. Remember, if I'm looking at a graph and I want to look at the DNA, I'd like to see the graph move from the bottom left to the top right. Not a whole lot of movement, bottom left, top right. All right, let's go to the next one. Apple, definitely falling over the last 3 months. Remember, I'm looking at a shorter time period. Next one, Yeti looks good. It looks better than some of the others. It is definitely a little higher on a 3-month basis. Look at that earnings. Earnings is just pegged up there at about 90 cents. PTX was moving a bit sideways, ran up, and now falling down. Oh, Lord, Daniel, stop chatting.
Just hit Control and Delete, and I'll just close it.
No, I don't want to do that. Yeah, I'm going to keep it going, I know. How about this Lowe's? You like that on a 3-month basis as a shorter term trade, getting in this stock for a couple of days to a couple of weeks? That may not be so bad. Look at the earnings, look at the volume. See, the lower the time period you look at, the stronger the short-term trade is. I like that. What else is here? T-Rex looks good, just not the right day to get in. Not the right day to get in with a red candle, even though it's an open one. Wow, PCMI. And again, when you see the graphs that look good, you'll know it as soon as you see it. Because why? Graphs don't lie. Look at that graph. As a shorter term swing trade, that looks good. That looks good. Holy smokes. Say again?
That looks nice.
That looks nice. This is why I wanted stocks from you guys. That looks good too. Kirkland really looks good. What catches my attention about Kirkland though? If I'm trying to plan the trade, what catches my attention? The stock's price currently for 1, 2, 3, 4, 5, 6, 7, 8 days hasn't been able to cross above that high. So as I'm trying to get into it now, what would I look for? I'd like to see the stock's price take out that high before I pull the trigger on it now. Planning the trade is looking at the graphs. The graphs don't lie. Let the graph come to you and don't try to make the graph more than what you see. If the graph is saying wait, then wait. When you go against so if your plan says, I want to look at the graph, make sure the graph is moving higher from the bottom left to the top right, blah, 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 blah. All right, that's what my plan is. But what do? Man, the stock looks good. It's right there. I'm going to go pull the trigger now. And then when the stock's price goes down, you go, oh man, why didn't I get into that stock? It didn't. That's why you let the trade come to you. So what do I mean by letting the trade come to me? If I like what this looks like on that 3-month graph, nicely moving higher, and if I can't get into it today, put in your order with a broker, put your order in with your broker about 12 cents higher than the high. So when the trade executes in your brokerage account, you're knowing that the stock is doing exactly what you want it to do, which is what? Go up in price. If I were to buy it now, who's to say that the stock's price is not going to go down and I start off with a losing trade? If I put my stock's price or my order in with my broker 12 cents higher than the high, I'm buying into the stock as it is rising. And that's what's important as far as planning the trades and looking at the graphs. What about drip?
12 cents above the high.
12 cents above the high is absolutely right, Jay. He's learned that from us.
Con says Instigo.
Who?
Con?
Con? What's Con?
What's his name?
Oh, is that his name? He says what?
Instigo?
And I don't know what that is. Is that a stock?
No.
Okay, what's the next comment?
N-S-E-E-G-O.
Oh, okay.
Instigo.
Okay, I'm not sure what that is. Sorry about that. And if it's a stock, just let me know. Oh, Lord. It just keeps me going here. Drip.
Volume is conviction.
Volume is conviction. So when I look at a stock, and Daniel's probably laughing, when I look at a stock, I got to make sure that I'm buying into a... Look at this. Look at drip back here. Beautiful equity curve. Look at that volume. Look at the equity curve and look at that volume. Volume is conviction. Volume, and then when it started to fall, look at it, and look at when it started rising, and then as it kept on rising, what did volume start to do? This is when you're trading, you're planning your trades, make sure you're buying into stocks that have rising volume. Be careful when if the stock's price is still rising, falling volume, look at what happens. All right? So even on 3 months, I don't like drip. So now let's take this a step further. as far as trying to plan your trades. Let's put this now onto a 1 month graph. Drip, do you like it? No. All right, let's go to Kirkland. I like it except for it's still in a sideways move.
Con says it's a stock.
Oh, INSGO? All right, I'll take a look at it. Inseego? PCMI still looks good on a 1 month graph. T-Rex, not quite yet. Lowe's, great on a 1 month graph. And again, the lower I get on that look back period, the more aggressive I am on that trade. PTX, not right now. Yeti, yes, looks good. Apple, not right now. Baba, not right now. Facebook, not right now. Let's go over to the other stocks, put them onto 1 month. Talon, it jumped up. I need more confirmation of the move. 1 day is not a trend. 1 day is not a trend. Let's see if I get more confirmation the next day. LSCC looks good on a 1 day. That's a candlestick pattern known as a bearish harami. The next candle would determine whether or not I would want to get into that stock. I wouldn't do it today. Let's see what the following day. We're going to teach you about candlestick patterns in these sessions at some point in time. Kronos, which is the one that I like the most out of the marijuana stocks. Woo! On a 1 month basis, not sure I want to get into it yet until it takes out the high over the last month. All right, until it takes out the high over the last month. Canopy Growth, even though two green candles, they're closed candles. All right, and now AKAO. No, I'm going to take that off. What was the stock? Inseego?
Inseego?
Spell it.
He has an INSEEGO.
There it is, INSG. So that's the other stock. I'm going to take a look at it in 1 year. So now that you understand about what to look for in a graph and planning your trades, 1 year. I like that it's higher on a 1 year basis. All right? A little bit more volatility than I would personally like, but on a 1 year basis, it looks good. 6 months, still looks good. 3 months, now we start to get in. Right now, the stock's price is pulling off of the high, sitting at a level of support. Let's see if it can bounce back and come back up. 1 month. Now, on the 1 month, it's going down. Now you understand by looking at the right timing period on the graph makes all the difference in the world. If I'm a longer term investor, do I like that? Well, yeah, it's moving up, but I'd like to have a smoother pattern of stock than this. So let me back this up a little bit. I'm going to go to another screen. I'm going to stay on this. I know what I want to do. I'm going to use my words, Joey. Not really. All right, I'm going to go to the viewers, and I'm going to go to the stock viewer. You guys want to find stocks that definitely, especially, I'm talking to my longer term people right now, my longer term investors, my new people. If you want to increase your probability to make money, I'm going to show you an easy way to use the VectorVest software to do that. I'm going to take the stock viewer, which looks at the over 8,000 stocks that we track, okay? I'm going to sort the whole list by relative safety. That is the indicator of risk for the stock. That looks at the stock's consistency and predictability of a company's financial performance. Stocks with high relative safety are stocks that tend to meet or exceed earnings expectations quarter over quarter, year over year. Ross Stores at the top of the list, Lululemon, Ulta Beauty. I'm going to make a graph of these stocks.
Con says thanks for giving different perspectives.
Oh, that's what it's all about. All right, let's go make a graph of some of these stocks. ROST, comma LULU, comma AULTA, comma UNH, comma FTNT, comma CNXN, comma COO, comma CRM. All right, so these are stocks. Let me move this back over. These are stocks that we would say, well, are these stocks that I want to be in? On a 1 year period, that looked good coming up into the volatility that we had in October, November, December. All right, I don't like that as much. Nope, 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 nope. So I'm just cherry picking through those, and I'm like, nah, I don't like any of those stocks. All right, let's see if we can make this better. Let's go back to the stock viewer. Where's that? Right here. Let's go back to the stock viewer. I'm going to use another indicator, CI, Comfort Index. I'm still sorting all of the stocks in our database by Comfort Index. I'm going to take a look at these stocks. Let's go see if these are stocks that you would want to take a look at. All right. TWLO, AMED, MDB, AYX, EHTH, G, what the heck? GRMTF. That's too many letters for a stock. BNFT, ETSY, CYBR. All right. So now I've sorted the list by CI or by Comfort Index. All right. Now let's look at these stocks.
It says, what are the general times? 3, 6, 9, 12 months. They consider me a short, mid, long-term investor.
All right, so the shorter term trader is going to look at a 1 to 3 month graph. The midterm investor is probably going to look at about a 6-month graph. The long-term investor is going to look at a 1 year to 1 to 3 year time period. Does that make sense? Short term, 1 to 3 months. Midterm, about a 6-month graph. Long term, anywhere between 1 to 5 years. But I would leave it defaulted at about 1 year. But if you want to get a better feel, if this is a stock that you still want to hold for the long term as a core holding, you can look at anywhere between 1 and 5, but I'm going to stick with 1 year. Does that make sense? Hopefully that answers your questions. Twilio, how many of you as a long-term investor feel comfortable with this? Type a yes in the room. All right? Don't type for the other ones. Let's just look at that one real quick. AMED, maybe. MDB, I like that. AYX, I like that, but it's got a little bit more volatility than I want. Totally understand that. Whoa! Ta-da! That's it. As a longer-term investor, I just showed you an easy way to find a stock like that. Holy smokes. How many of you are long-term investors would jump all over EHTH? If that would be the case, type in the room EHTH. That way I would know that that's exactly what you're looking for planning your trade. That's it. For the longer term investor, that's exactly what I'm looking for planning my trade. All right, what else is in here? GRN, not nearly as much. I do like BNFT, definitely moving from the bottom left to the top right, but I know going forward that this stock has the propensity to have some volatility in it. I can see that, all right? And that's why looking at a graph is so important. Etsy, yeah. Oh, CYBR, look at that. Bottom left, top right. Not a ton of volatility, but look at that and still running higher. Did anybody type in for EHTH?
Bruce.
There you go. All right, so for the longer term perspective, that's what you're looking for. If I am a shorter term, then I'm looking at some of those graphs that you had me look at. And for planning your trade, you have a better idea. Now, let's do one last thing. Let's say that the trades that you gave me earlier from a shorter term perspective, when can you get out of these trades? Let's say you were in them for a short term, made some money. I'm going to add 2 moving averages, a 3 and an 8. All right, let me change this style. Green, solid, and on the 8, style, red, oops. For the shorter term investor, how about using crossovers on a 3 and an 8 exponential or whatever moving averages you want? But for the aggressive investor, I'm looking at a 1-month graph, 3-8 crossed, 3-8 would have crossed to get you out here. Would that have been a winning opportunity? Answer to the question is yes. All right, let's go to the next one. 3-8 cross back here. Holy smokes. I stayed in this stock almost a whole month. Remember, it's short-term trade. I stayed in this stock almost a whole month until I get out today. How about that? And you know what I like about using moving averages even as a swing trader? where I'm trying to hold the stock for a couple of days to a couple of weeks. How about when you get here? And this is where everybody gets scared. When the stock goes down for a couple of days, you panic, especially if you're trading it. How about the 3 and the 8 on an end of day basis said, hold on, little Padawan. I said that for Daniel. Hello, hold on, little Padawan. Hold on, grasshopper. Let the trades come to you as far as managing your knowing your trading plan. So if my trading plan knows when I buy and knows when knows what stocks to get in, and now here's knowing when to get out. If the 3 and the 8s don't cross on an end of day basis, you leave it alone. Well, you got nervous here, biting nails, pulling out here, and then you said, hey, I'm smart. Hey. And then the market pulled back. You go, oh. And the market says, hold on, buddy, hold on. And then finally the 3 and the 8 cross. Was that a winning trade, though? Look at that. So knowing in your plan when to sell is so important. Apple we looked at. Did we look at Yeti? How about the 3-8 crossed on Yeti here? This would have ended up being a pretty even trade. It went back down. Right now, the 3-8 cross here, woo! Look at it run. So now if I'm a shorter term trader, as I got the question about looking for stocks that are lower dollar stocks and find good qualities of those, how about using stocks that have a 3-8 crossover? Look at that. All right, what else is in here? Lows, 3-8 cross here. Look at that. Even on the pullbacks, the 3-8s are holding. And again, this is for the swing trader. That is some good stuff in regards to planning your trades, knowing what to look for on the graph and knowing how to make decisions on the trades that you're currently in or on stocks that you were in the past and know how to make them better going forward.
Krishnan asked, are the earnings going down on EHTH?
Let's go back to EHTH. Let's go create EHTH. Let's go look at it. EHTH. And for the longer term investor, I want to look at earnings. So again, I'm looking at a 1-year look back period on earnings. EHTH is going up. Longer term looks good. Earnings is starting to fall, but guess what? Earnings are still positive and still higher than they were in the last 1 year. So remember, I said that as a longer term investor, what graph are you looking at? 1 to 5 years. If I want to make this a little longer than 1, grab it by the end. I was going to say what the president said, but I changed my mind. No president talk here. So I'm going to grab it by the end, and I'm going to slide it over a little bit to give me a little bit more time. There's 2 years, and I'm looking at the gray bar to see what, oh, you can't see it. But I'm up to like almost 3 years, so I can go anywhere between 1 and 3 years. Do you still like it on almost a 3-year graph? Same thing. So remember, I'm looking at a minimum of at least 1 year. I like it. If I'm a prudent person, let's put it on a 6-month graph. Do I like it? Yes, it's moving higher. The 3 and the 8 still have me in it. Let's look at it from a trader's perspective. 3 months. Do I like it? 3 months. Yeah, the 3 and the 8 are still in place. How about a 1 month? Do I like it? Yeah, the 3 and the 8. So I'm taking that one stock and I'm putting it into 3 different perspectives, whether you're a longer term investor, whether you're a swing trader, or whether you are a shorter, even shorter term trader than that. Looking at these look back periods makes a difference. And you know something? If I'm a shorter term trader, does earnings mean as much to me? No. I'm looking at timing the trade. If I'm a longer term investor, does earnings mean as much to me? Yes, it does, especially knowing that it's higher than it was a year ago. So folks, did that make sense? I need to know, anybody who is already a subscriber, did that make sense? And my new people, does that make sense in being able to use the VectorVest tool and being able to plan your trades and trade your plans? Type it in the room. And if it didn't and you got confused, type that in the room as well. Because then that teaches me, maybe I need to teach it a little differently. I don't want to leave anybody behind. These live sessions are your way to get your questions answered along the way of learning how to use this tool. That's the beautiful thing about making that happen. All right.
You said you had mentioned using a 20 moving average, watching that price stay above 20 MA. What about that?
All right, so fine. Let's take
I think that was the other stock, not this one. This was
I can add a 20-day moving average on any trade.
any stock.
On any stock, thank you. What did I want to do here? Oh, I'll make this darker. There's a 20-day moving average for the longer term investor. I use the 3 and the 8 because I'm so used to it, whether I am swing trading or day trading. Longer term investor, how about using a 20-day moving average? Better yet, how about using a 40-day moving average to keep you in? Folks, we've got every way that you want possible to stay in a trade. Here's a 40-day moving average. Above the 40-day or above the 20 is not a bad way to go as well. If I want crossovers, I also have the 3 and the 8. But does that make sense to everybody out there? So no matter what stock I'm looking at, Bruce, let's go back to some of the stocks that you gave me. And let's go put on the 20. All right, let's go change the style to darker. And let's go put that on a 1-year graph. Oops, click on OK. Let's put that on a 1-year graph. Not 1 month, 1 year. What I want to be in it now as a longer term investor, it just went above the 20, earnings is rising. This may not be a bad opportunity. Nicely above the 20, let's put it on the 40. Right click, change the style. There's the 40. Either way, as a longer term investor, I could be in it, but I also know I automatically have a profit target right at the high already. Why? Because that is a good level of resistance.
Dennis Sanchez asks, is the EPS calculated based on the current value? If so, we would expect the EPS chart to dip with a run up in value?
No. Okay, so our earnings, anything that deals with our earnings is projected. It's projected out or forecasted 12 months out. So when you look at the earnings right now, it says 515. We're saying that at this time next year, the earnings on the stock should be at $5.15. We use past data, past earnings data, current earnings data. We take that and we forecast out 1 month. All right, does that make sense? We forecast our earnings. So why is that important? Because if I had the actual number of earnings, what the earnings dollars are, how is that going to help me now? If this was the actual earnings, saying earnings is 515, so the earnings is 515. When we have our earnings, because it's forecasted, I bet you that 515 is higher than the actual earnings of the stock right now. I bet you. So having that forecasted gives me an idea that the stock's earnings should be growing over the next year. Hopefully that makes sense.
Kim Murphy asks, will I be able to rewatch this? Please let her know that she can.
Kim asks if she will be able to rewatch this. Yes, this is being recorded for you to rewatch. All right, a lot of great questions today. But understanding that this is the first part of the mini-series of planning your trades, trading your plan, you now have a better perspective on what to look for in the stocks that you're currently tracking and stocks that you have looked at in the past to be able to help you make money. What's the matter?
This mouse.
Oh, you broke it.
Sorry.
That's all right. All right, so yes, folks, this will be recorded for you. What is it here? Took your options paycheck course. It was great. Thank you for that, Emre. Emre, very good. Your tools work. I have made very good money over the last 3 years. Thank you very much for that, Emre. I appreciate that. And I thank you guys for all of your chat today. This is part 1 of a 4-part mini-series. Next week, we're going to start getting into market timing and honing in on your when to buy. So we cursory went over on plan your trades, trade your plan. No matter what your plan is, stick to it. You notice that on some of those moving average crossovers, even when the stock went down, your moving averages kept you in. Even when you're looking at a moving average, whether it's a 20-day or 40-day, on an end-of-day basis, make sure that the price crosses below that before you pull the trigger. Don't try to outguess the market, because every time you do, the market is going to humble you each and every time. Planning your trades keeps you in line with what the market is doing and not trying to outguess the market.
Jay says, will this be on Netflix?
Will this be on Netflix? This is not going to be on Netflix, Jay. By the way, Jay is going to be here all week. So make sure you tip your waitress on your way out. So this is what's going on. This is a new mini series. I'm excited about it. By the end of this series, I will walk you through the rooter to the tutor. I don't know where the rooter is or the tutor is, but I'm going to walk you through the rooter to the tutor of how to set up a trading plan and how to stick to it. And I'm going to show you how to take the emotion out of trading by letting it be automated within the VectorVest software. All right, and in that way, no matter what you say with your heart, the software is going to keep you on the straight and narrow. All right, so with that.
Let them know we're going to do this again at 2 o'clock on Twitch.
Oh, all right, we're going to do this again at 2 o'clock on Twitch. Go to www.twitch.tv and then search for VectorVest.
We'll be there at 2 o'clock.
We're going to be there at 2 o'clock. Anything else? Why don't you just say it, Joey? Oh, my goodness. Oh, now it's just wrap it up. Whatever. All right, well, Joey's my guy in the background. Can't do it. All right. So, any other questions? Do we have a place that they can ask questions that we can answer later?
Your email.
Oh, my email? No. Oh, no. I'm not going to give my. If you have any questions, give our product support staff a call. It's not that I don't love you guys, but it's tough for me to get back with emails just quite yet. Give our product support staff a call. They'll be more than happy to help you. But especially the new people, hopefully we were able to answer some questions for you, and that's what it's all about. All right, so in about an hour, we're going to be on Twitch. And in the comments, they can. All right, so we're going to be on Twitch. Come see us over there. We're going to do this all over again. And again, we're going to have this recorded over here on YouTube. So thank you for being here. Adios, arrivederci, ciao, au revoir, sayonara. Have a great weekend.
Faster, smarter, better trades? You're just one tap away with the VectorVest mobile app. Just create a watch list of stocks. With one tap, VectorVest automatically rates them for value, safety, and timing, marks them buy, sell, or hold, and ranks the list from best to worst. Just one tap. The all-new VectorVest mobile app. Free for 2 weeks. VectorVest. Clear direction in the palm of your hand.